Apple just lost $263 billion in market value after announcing a 20% price hike on MacBooks and iPads linked to memory chip costs, and one chip maker is winning big. This represents one of the most significant single-day market cap declines in Apple's recent history, signaling that investors have serious concerns about the company's pricing strategy and its ability to maintain market share in competitive segments. The announcement came as a shock to the market, with Apple citing rising costs in DRAM and NAND flash memory components as the primary driver behind the substantial price increases across its portable computing lines. Memory chip prices have surged approximately 35% over the past 6 months due to tight global supply chains and increased demand from data centers and artificial intelligence applications, putting pressure on hardware manufacturers worldwide. Analysts at major investment firms quickly downgraded their outlooks, with several expressing concern that the price hikes could dampen consumer demand during the critical holiday shopping season. Goldman Sachs estimated that Apple could see a 12 to 15% decline in MacBook and iPad unit sales if price elasticity plays out as historical models suggest. The $263 billion erosion from Apple's market capitalization reflects investor fears about margin compression and potential revenue headwinds in coming quarters. This single-day drop ranks among the top 10 most significant market cap losses ever recorded for a single company, underscoring how deeply the market has reacted to this strategic decision. Institutional investors expressed particular concern about Apple's messaging, noting that the company has historically avoided directly attributing price increases to component cost inflation. The transparency, while appreciated by some analysts, also revealed vulnerabilities in Apple's supply chain that many believed were better insulated than competitors faced. Competitors like Samsung, Dell, and Lenovo have absorbed some memory chip cost increases rather than passing them directly to consumers, maintaining their pricing while taking margin hits. This made Apple's decision appear particularly aggressive by comparison, potentially ceding market share to rivals in the crucial laptop and tablet segments. However, beneath this negative headline lies a significant winner: SK Hynix, the South Korean memory chip maker that supplies a substantial portion of Apple's DRAM and NAND components. Following Apple's announcement, SK Hynix's stock surged 8.3%, reflecting market recognition that the company will capture higher margins on memory chip sales as customers like Apple accept higher input costs. SK Hynix's profit margins on memory chips have expanded dramatically in 2024, with the company reporting that average selling prices for DRAM increased 42% year over year. The company's guidance for continued strong pricing power through Q4 2024 suggests that memory chip shortages and demand imbalances will persist longer than previously anticipated. The South Korean chipmaker now commands approximately 28% of the global DRAM market and 19% of NAND flash memory production, making it a primary beneficiary of any industry-wide price increases. Analysts upgraded SK Hynix price targets by an average of 12%, with many citing Apple's pricing announcement as validation of the company's strong bargaining position. Micron Technology, another major memory supplier to Apple, also saw its stock price increase by 6.2% following the announcement, suggesting that investors believe the entire memory chip industry will benefit from customers accepting higher component costs. Both companies are now expected to post record earnings in their next quarterly reports, with analyst consensus calling for memory chip segment profits to reach all-time highs. The broader semiconductor industry has taken notice, with companies like Intel and Taiwan Semiconductor Manufacturing Company expressing cautious optimism about pricing power across the sector. If Apple's price increase sets a precedent, other hardware manufacturers may be forced to follow suit, creating a sustained tailwind for chip makers globally. Industry observers note that Apple's decision essentially validates the supply-demand imbalance that memory chip makers have been leveraging for negotiating power with customers. By publicly acknowledging that chip costs necessitate price increases, Apple has inadvertently strengthened the bargaining position of SK Hynix and other suppliers in future contract negotiations. This development underscores a critical shift in the technology supply chain, where component manufacturers have gained leverage over final product assemblers due to structural supply constraints. The memory chip shortage, unlike previous cycles, shows no signs of abating within the next 12 months, meaning margin pressures will likely persist across the industry.